$640 gone in 9 minutes, and the trader did nothing wrong except pick the wrong hour to trade eurodollar. That hour has a name, and by the end of this, you will never trade it blind again. It's 3 in the morning New York time. Dana's short eurodollar tight stop feels smart. For 2 hours, the chart barely breathes, 5 or 6 pips of drift, nothing more. She gets bored, doubles the position, convinced the market is asleep for good. Then, with no warning, the candle just rips 50 pips against her in under 10 minutes. Stopped out, $640 lighter. What actually happened is London opening for business. She had no idea the calmest hours of her night were about to collide with the busiest session on Earth. London's trading day runs roughly 8 in the morning to 5 in the evening, London time, which is about 3 a.m. to noon on the U.S. East Coast. Notice the two seams. The first hour still overlaps the tail end of Tokyo, and the last few hours overlap New York opening up. Those seams matter more than the middle of the day, and we'll come back to why. One more label worth knowing. You'll often hear this called the European session too, because Frankfurt, Paris, and Zurich are all open the exact same hours right alongside it. Guess before I give you the number, what share of all Forex volume on Earth happens inside this one window? Most people guess 15 or 20%. The real figure is 43%. Close to half of everything traded globally. That's not an accident. London has sat at the center of world trade for centuries, wedged between Asian markets closing and American markets waking up. Every bank and every fund needs a bridge between those two worlds, and London has been that bridge since before Forex even went electronic. That volume is exactly why Dana's quiet night was about to end so violently. Two small tools remove most of the guesswork here. First, a market hours converter you put in your city and it hands you session open and close in your own clock, no mental math at 6 a.m. Second, an average pip range tool, which shows pair by pair how many pips that instrument has typically moved this session lately. Notice the word average. It's a baseline, not a promise. Some days blow right past it. If Dana had checked either of these before her trade, she'd have seen eurodollar's typical range was nowhere near used up, and known exactly what kind of move the day still owed her. Pause and guess. Inside these 9 hours, when is volatility usually highest? The open, the middle, or the last hour before close? Most people say the open, and they're half right. Movement is sharpest that first hour. As the overnight book gets repriced, it cools noticeably around midday while London breaks for lunch. Then it can wake back up near the close as New York arrives. That overlap is also why spreads tend to tighten. More banks quoting the same pair means tighter pricing, which is money in your pocket. The part that, remember, context beats the pattern, the stop is what saves you, and nothing replaces practice on a live chart.